I'm going to talk you through the execution by one of our elite traders on a Eurostoxx trade, playing for a trend continuation on a gap down. So this was on the 6th of March, and if you look to the bottom left of the screen, there are some daily candles, and that sort of outlines this trade. So if we talk through sort of the landscape and the setup behind this trade, we had a very bearish outlook. So coronavirus had just started to sort of cause the stock market to sell off, and so you can see Eurostoxx have had some really large trading days here as it sold off. It's then had these 5 overlapping days, forming a bit of a flag in the daily. And so what we're looking for here is a break of this flag and a continuation of the trend. Now, just to add a little bit more color to this picture, we'll refer to this bigger picture that I've got here on my slide, which is the profiles. Now, if we look, before I go any further, the profiles are the pit session profile. So it's 7 AM UK time to 4:30 PM UK time. Now, let's examine potentially the weaknesses, how this flag is formed. Now, so if we look to the bottom of this profile here on the 2nd, where my mouse is circling, this low is a no excess low, and so this was made by 2 attempts at breaking down, both of which were rejected, and then the market traded back up, forming this lower balance here. Now that's important because it suggests that there are some vulnerabilities of this region to the downside. Then if we look to the other side of this, this flag that we've got here, we have a rejection of the highs here, so the selling tail. Okay, we also have another day that was up there, and this is a bit of a P profile. It opened here at the lows, traded up, but it's got a very, very poor shape. After that, the Thursday, this was a very bearish day, and then obviously on the Friday, on the 6th, this is when we look to play this continuation. So let's just, I suppose, like one of the things that makes this trade really interesting to look at is the fact that, not only is there information like what I've just described in sort of a market structure and technicals kind of outlook, but then also if you examine the fundamentals too. So on this day here on the 3rd, where we got this selling tail of the highs, this is the day that Fed did its first surprise rate cut, and so adding stimulus to the market made stocks rally, and this rally went, but it was rejected. Now that is quite interesting because obviously that rejection is playing into the fact that the larger move is bearish, and that's sort of telling us something about what our participants want to do. The next day following that, well, that evening for the UK and sort of day in the US was Super Tuesday, and Biden did well. So then on Wednesday, the market found that as a reason to rally, and it rallied again, which we were talking before about having a really weak P profile. Well, yeah, that also tells you a lot. So we've had the selling tail, the seller, on really massively bullish news on stimulus the day before. We rallied up, and there hasn't really been any conviction in the buyer. So then those two pieces of information, I think, really add color to what we had here on the 5th. Now, the market opened here, which is a really interesting place to open, because it's opened in this area where if you saw volume develop, you'd start to think, okay, potentially we're going to trade up from here, because the market then is sort of positioning in a point that makes potentially these two, the sort of highs of these profiles, a bit more vulnerable. But on this day, there just wasn't the buying up here. And then the fact that you have, obviously this is potentially, well, as a strong level, or what you'd expect to be a strong level, you know, you'd need significant buying and volumes to come in here for this to break. And as you can see from the volume part of the profile, the volumes aren't there. The market comes off, and then if you're putting that into perspective of the bigger picture, we've got this bearish market, this daily flag here, and yeah, and then now there's the opportunity for the sell-off. So then on the 6th, the market opens with a gap down, has a small IB, and then look to play the trend continuation. And so let's examine this a little bit further. So here we've got a 30-minute chart. Again, this is just the pit sessions and gives you a bit more I suppose like information again and a different point of view. So here's that low. So this was made twice. It could be hard to tell because obviously if this happens sort of in the border of these two time periods, then this could actually be one low, so like an excess low, but it's not. The market came down twice. Then here you can see this Fed rally, so this is just a big rejection candle. And then here is this P profile. So after Super Tuesday, so the market traded up, and these candles are quite big. And again, just like these ones, I think sometimes when the candles are like this, it's almost like a lack of control within the participants. And then we had this day here on the 5th where the market opened high and wasn't able to sustain the highs, no volume, and then it traded off. And you can see here as it got to the lows, the volumes got higher, so sort of accepting price down here, which is a bearish sign, as that volume then is going into sort of the lows of the previous days. Then here on the day that we're interested in, these two make the IB, so quite a tight IB. The market tries up, rejects, and comes down. And so the trade we're looking at is a failure of here, and then this selling and playing down through. So sorry, I hope you can see my mouse. And then selling down through this range, getting out here. So this move's quite big, and yeah, there's obviously a lot that went into the setup of this, a lot of thought. And then just in terms of execution and trade management, this move isn't in a straight line. And so, this trade is managed by sort of increasing size, decreasing size as the move goes. The trade's also over 2 hours long, so we're not going to look at it all. But that's just to give you a bit of a bit more of perspective on what's going on. Now, the last piece of information, just in terms of kind of execution, trying to figure out where you're right or wrong. Well, these two profiles here, so the one on the top left and the bottom right, are the pit sessions. And then this bit in here is the overnight session. So on the 5th in the evening, the market continues to trade lower, and it forms sort of a new balance down here. Then on the morning of the 6th, the market opens above that and trades back down into that range. Now, where the market bounced off overnight is now a bit of a decision point. So in the overnight session, the market, as you can see, decides to keep trading lower. So it trades back below that overnight balance or the evening balance from the day previously, the day prior. Now, this means that we're opening with a gap, and now we've got this bit where we've got potentially this vulnerable no excess low below us. We've got a gap above, and we've got sort of a largely bearish picture made up from I suppose like the bearish move that we've seen, but then also the bits of information about the rejection of the Fed cut that we discussed before. So in terms of execution, we've got this IB that we're letting form, and then we're looking at, okay, well, we've got a gap above. how do we trade around this gap, and that's really important for getting a read on, well, are our sellers strong enough to keep us down there? If not, should we be playing for a trade back up? And then what's important here is just to think back about, okay, what happened overnight and where we had that decision point we were talking about before. So obviously if we are holding below that decision point, then the market's still continuing to hold this decision that, well, actually, the market is weak. And so while we do that, then our eyes should be, we should be open to potentially playing a move to the downside. So let's just go back over our technical summary before we move on. So we're sort of bearish in the bigger picture, and coronavirus is a major player in that. There was a low made with no excess, and that was the bottom of the daily flag. There was a Fed surprise rate cut, and the move on that, the bullish move, was rejected. The market had a poor bid after a good result from Biden on Super Tuesday, couldn't take out the Fed highs. Then we've had an overnight move that broke this daily flag. And then we've come to the point where we would be on the opening of that morning, which is the market opening outside of yesterday's range and also opening below values, i.e. opening with a gap down. So the idea for the trade is that we want to look for a continuation of this high time frame bearish trend, and then to find an access for this, we need to see some evidence of a higher time frame participant in the market. So we're looking for a continuation of a big trend. We need some big traders to, I suppose, be stepping in for that continuation, because without this sort of other time frame, higher time frame participant in the market, then we can't really hope for a continuation of a trend that had those people involved. And then in terms of where you're right, where you're wrong, as we talked about before, there was that overnight decision point. So this is a 1 minute chart for the Eurostoxx, and you can see here how the initial balance is made by this sort of auctioning back and forth across this range. The market then tries to false break the low of the initial balance. So the initial balance is drawn, or has border with these two green lines here. The yellow line is a daily low from a pit session. The pink line is a low from an overnight session, so outside the cash hours, and then this red line is it's the low that was made on that no excess low, so the low before this day. The low of the flag. So so the market false breaks the IB low, it then trades up to the IB high and gets above the IB high. Now here potentially, this is again sort of a bit of a decision point, because the market's now gotten above the IB, it's putting in time and positioning above there, and now you think to yourself, well, okay, well, are we going to trade back up or fail and trade back up and close the gap, or are we going to hold? And so this becomes a very, very important region for the trade. And if the trade does hold and then push lower, as it does, then with some of these big days, or this could turn into a really big move. And so that's what our elite trade is playing for. And so in fact, they sell up here, and the video that we've got starts back inside the IB, and so they hold the move all the way through down to here, some decent size in the move, and work their way in and out of it. So starting to scale out here, adding in a bit more here, scaling out here to protect, and then working position back down through this channel. So we're obviously not going to look at the whole thing, because this goes from sort of 20 past 8 until 10:30ish, and so that's quite a while. So what we're going to look at is just this bit of the trade here. So one thing that the video doesn't show is the price action up here, and I think that sort of that's one of the beauties of this trade. Sort of the really interesting features of this is about how the trader used the information from the Fed and from Super Tuesday to sort of add a bit more color to what was going on in the profiles, and then add to the conviction of the trade. And then the other thing was to that point that we made on the previous slide, which is about, okay, we're expecting a continuation of a higher time frame move. So we want to see some evidence of high time frame participants in the market. And so that's why it's really important, to examine what was going on here when the market got above the IB high. So while it was above the IB high, it was spending time and putting volume there. Whenever there were big bids, they were getting snapped up by the sellers. And so if you're thinking about, okay, what is a higher time frame participant looking like? Well, they're after size for their position. So, every time that size comes on the ladder and someone's taking it, well, that that is a good sign that participant's in the market. Now, also we talked about the overnight decision point. Well, the overnight decision point was still above where the market got to. So the market held above the IB high, but the market couldn't rally up to this overnight decision point. So you've got, well, okay, we're still in bearish territory. We are above the IB high with a gap above us, so that could cause you a little bit of worry. But you have price action that suggests, while we're here, someone's really keen to be selling. And so, that was the reason that our trader put this trade on. So got short above the IB high, and then we're going to see them work their position, or, well, I suppose, like, play this move down here. The market starts to get a little bit stickier here. I mean, you can even see it from the candles, and then taking a little bit off here, and then a little bit more off down here, and then the market pulls back a bit. And so we'll just watch that. We'll watch it on double speed, just so that I suppose we get to see all the action a bit quicker, and it looks a bit more fluid. And and then after that, the move is just about, well, what they do is, like I said before, just look to add a bit more on pullbacks, then take a bit more off each time it moves down, and just kind of manage their position through this trade, using price action basically to judge what they should be doing. Okay, so let's transition over to the video. So here we've got the ladders, and the trader is already short, as I said before. So the IB high is at 00, so just here, and they're short above, and added as the market came down, and we will watch from here. So double speed. Okay, so the market's just come back down through the IB, trying to add a little bit more to the short, and you can see here that the market's coming back up, but it's not filling the rest of that order. And in some ways, that's sort of a good sign, since you're trying to go short. If the market can't pull back, then you've obviously got some strong sellers. Again, it can't get back to the IB high, so we're still holding well below the IB high. Right, it's starting to move a bit lower, picking up a bit of momentum. You can see the trade is quite a healthy option. So they're all good signs that this, is the move we want to see. So here at 85s, that's the IB low, so down at the IB low. And broken through. Now there's a bit of size here at 80s. So market's still holding below the IB low. Alright, there's some quite big size in front of that too, which is gone, and now we're trading into it. Alright, and there it goes through. Now 77s is the overnight high, so sorry, the overnight low, as you can see already from the ladder. And then there's more size below that. So the market's just happy to trade into it. Right, and then having a bit of a pullback. So there's obviously we took out, there was quite a bit of size on the ladder. The market's pulled back after taking it, so just taking a little bit of the position off. It's coming back down to the lows again. Right, again, there's a bit of an auction without really gaining any ground, so taking a little bit more off. Right, it's pushing lower. We're gaining a bit of momentum. Now, sort of from that support becomes resistance idea, so you can see he's looking then to put some position back on at where he found a bit of like two-way. So obviously now that was support for the market that got broken, so now if we go back there, it's potentially going to be resistance. And so we've broken down a little bit further. Taking a little bit more off, and now looking to see if the market flicks down a little bit further. Interestingly, it does, but just not enough for the fill. Alright, and so we found again sort of a bit of two-way interest at these lower prices here, and so pulled off quite a large chunk of the position, but willing to put it back on where we found support higher up, with the expectation that will then become resistance for the next stage of the move. Right, and as you can see, we're still auctioning around these lows. There's a bit of time here, but unable to break lower. Alright, again taking a little bit more off. And now the market starts to come off. Alright, so we'll leave it there. And so I'll just transition us back to the slides. And so again, that was this part here. So we'd broken below after seeing the seller snap up any size above the IB high, traded down. The market held comfortably below the IB high and started to move down. We saw some size on the bid, which got taken out, and the market came down. And then each time we found a little bit of two-way trade, a little bit of resistance, just took a little bit off, but was willing to put it back on in case the market comes back up. Again, that support becomes resistance type idea. Yeah, just looking to work the position. All right. So takeaways from this. I suppose like key to the whole trade idea was just this whole starting with the bigger picture piece. You know, what's going on technically in the market. So yeah, starting with those daily candles, you know, and getting a read for that, and then overlaying other information. So here, sort of the next really interesting pieces that was done to build this idea and get it to this execution stage was about thinking about, okay, what is the response of the market? So the technicals, the response to sort of the news that we've seen during the week. So that was the Fed cut, Super Tuesday, and how did the markets trade around those? And when we came back to some of those areas, you know, how did the markets then behave? And then adding all of that information to this bigger picture piece, and yeah, just building all that color into the idea, and then using that to give you conviction. And then sort of the last piece in terms of the execution, which unfortunately we didn't get to see on the video, but you know, that's about, well, okay, if we're expecting continuation for a higher time frame move, then, you know, we want to see some price action that suggests that there are these higher time frame or other time frame, whatever you want to call them, participants. And that was seen on the ladder by, yeah, people just being, you know, willing to sell big size. And so, yeah, and so then that obviously came into play, and we saw that trade there that was which was executed with really significant size. Obviously, if you're willing to put, you know, position on that big, you've got to have that comfort in doing it, or that conviction, and that conviction was made, yeah, again with the bigger picture, and then looking to add color to this by thinking about how the market responded to the news and using that just to build a nice big picture, build your conviction, and then execute on that conviction when the idea presented itself.